Hello and welcome to this webinar on Materiality Made Clear. My name is Richard Hemmings and I'll be taking you through this webinar on materiality. My background is as an auditor in firms of varying sizes and in technical roles within those firms. And most recently, I've been working independently, mainly with small and medium-sized accountancy practices, helping them with all things audit, such as file reviews and training and with their methodology. So that's what brings me to be presenting this webinar for you today. So let's have a look at what we're going to be covering in this webinar. So what we've got on the left-hand side there is our definition of materiality from ISA 320, which is the auditing standard dealing with materiality. So what it says is misstatements are material if they could reasonably be expected to influence the economic decisions of users that they take on the basis of the financial statements. So that's what we're really looking at here. And breaking down as to sort of the structure of how we're going to approach this topic in this webinar. First of all, let's have a look at the terminology and some of the concepts that will be coming across and make sure we're really clear on what those mean. And then we'll look at the considerations that auditors need to take when setting materiality and performance materiality. We'll also consider where and how auditors might use specific materiality levels for specific areas of the financial statements. And we'll look a little bit at what that's sort of clearly trivial and that concept, the role that plays within financial statement audits as well. And then towards the end, we'll look at how we actually apply materiality in concluding on any misstatements that we've identified during the audit towards the end. So that's the lie of the land for this particular webinar. So let's dive in and have a look, first of all, at some of the key terms that we're going to be coming across and what they mean. So the three terms really that I want to unpack to start with are, first of all, financial statement materiality, or I think to use its full name from the auditing standards, materiality for the financial statements as a whole, which is a little bit more of a mouthful. People tend to just say financial statement materiality as a way of differentiating it from performance materiality. So what's financial statement materiality? This is the materiality that is used ultimately at the end of the audit to determine whether any misstatements that have been identified during the audit are material or not. And what's the driving force in terms of determining what that figure is the users of the financial statements. So something is material, as we saw from our definition, if it could be reasonably expected to influence the decisions of users of the accounts. So when we're setting financial statement materiality, our key consideration is, well, who are those users and what's going to affect their decisions?